Hi, on behalf of HDIN Research, we are presenting a strategic review of LOTTE Chemical's Transformation 2030 Roadmap. This session explores how one of the world's leading petrochemical entities is navigating a period of unprecedented structural change in the global chemicals market. Using the SCQA framework, we observe a significant divergence between LOTTE's historical strength, its massive production scale, and the current complication of structural oversupply in the Asian market. The central question for the board is how to decouple profitability from commodity cycles. The proposed answer lies in an asset-light transition toward high-growth segments like battery materials and hydrogen. LOTTE Chemical operates as a truly global integrated player. From its primary coastal hubs in South Korea to cost-advantaged shale gas positions in the United States and strategic regional footholds in Malaysia and Uzbekistan, the company maintains a logistical and operational footprint that covers the most critical consumption and production regions globally. Objectively, the scale is immense. With a group-wide ethylene capacity exceeding 4.5 million tons, LOTTE remains a top-tier global producer. However, we note that the concentration in naphtha-fed crackers in Korea versus gas-fed crackers in the U.S. creates a mixed cost curve profile that is highly sensitive to fluctuating oil and gas price differentials. The downstream portfolio shows a strong leaning toward polyolefins, PE and PP. While the vertical integration at the Yeosu and Daesan complexes provides efficiency, it also results in a high correlation between corporate earnings and regional polymer spreads, particularly in the Northeast Asian market. The industry is currently facing a, quote, perfect storm. Our analysis identifies three key external pressures. First, China's rapid shift towards self-sufficiency. Second, persistent feedstock price volatility. And third, a temporary demand slowdown in the EV sector. These factors combined have pushed commodity spreads below historical support levels. Financially, the impact is evident in the cumulative operating losses observed through 2024 and the first 3 quarters of 2025. This negative trend underscores the necessity of the current structural reform, as the legacy commodity business model struggles to generate positive cash flow in the current spread environment. This brings us to the core strategic inflection point. Can a legacy petrochemical giant successfully pivot into a technology-driven innovator while managing its balance sheet through the bottom of the cycle? This transition is the defining challenge for the current management team. The answer is a 3-pillar strategy. Pillar 1 is asset light, or the reduction of low-yield assets. Pillar 2 focuses on specialty materials, where margins are more resilient. Pillar 3 is green growth, aiming for a 60% revenue contribution from sustainable and future tech products by the end of the decade. In the battery materials segment, the acquisition of LOTTE Energy Materials is a cornerstone. By focusing on high-end copper foil, an essential component for high-density EV batteries, LOTTE is moving up the value chain. Despite current market headwinds, the long-term fundamentals of the energy storage market remain a primary growth driver. The hydrogen strategy focuses on ammonia-to-hydrogen cracking tech. By leveraging its existing industrial complexes to create hydrogen hubs, LOTTE aims to capture a first-mover advantage in the clean energy transition, targeting a supply of 600,000 tons of clean hydrogen by 2030. Asset-light execution is about capital discipline. We see this in the divestiture of the Pakistan PTA business and the liquidity-enhancing PRS agreement in Indonesia. These moves are designed to de-risk the balance sheet and provide the necessary, quote, dry powder for specialty investments. ESG is no longer a compliance checkbox, but a competitive necessity. The Green Promise 2030 initiative, particularly the chemical recycling project in Ulsan, positions LOTTE to meet the growing demand from global brands for circular materials and carbon-neutral supply chains. Looking toward 2030, the vision is a 50 trillion Korean won revenue company with a vastly different profile. Success will be measured by the speed of portfolio rebalancing and the ability to maintain investment-grade credit ratings while financing this capital-intensive transition. In conclusion, LOTTE Chemical is at a critical juncture of corporate evolution. For stakeholders requiring deeper, granular data or customized market intelligence reports on any of these segments, please contact our team at HDIN Research. Thank you for your time.